Hey everybody, I'm Aaron Norris. It's November 25th, and will Wall Street be able to hang with local investors in 2016? That and much more as we cover the biggest headlines in real estate. Existing home sales decreased 3.4% in October, off of their second highest in 8 years, according to the National Association of Realtors. Single-family homes built for the purpose of rentals have had a nice bump this year, although a small market, analysts expect the trend will continue into 2016. S&P Case-Shiller Index saw a 5.5 increase in its 20-city index, beating expectation. San Francisco and Denver led the pack with the strongest price appreciation. San Francisco was like 11%. TRID has caused no major market meltdown just yet, and the Bureau of Economic Analysis reported GDP grew 2.1% annually in the third quarter. Whether that is strong enough for the Fed to raise interest rates, we'll have to wait and see next month. A recent study by the National Association of Home Builders with Dodge Data and Analytics shows green homes will soon become the norm, not the exception. In some states like California, it's just not a choice. Lots of new homes I'm seeing around town feature solar, high-efficiency appliances, efficient windows, water-wise fixtures, the whole gamut. And costs on these upgrades have actually come down quite a bit in the last few years. And you know what? Consumers are really interested in the healthy living, and it's not all driven by what you would think, like newer buyers and millennials, but actually are 55 and over. Whether appraisers will give much credit for those upgrades, well, that'll probably get a little bit better over the next couple years, as a lot of these upgrades save a lot of money for the consumer living in the home. A recent Freddie Mac report looks at the costs of foreclosures in judicial versus non-judicial states, and this was really interesting. Judicial foreclosure states take much longer to foreclose, up to twice as long, and that just includes the foreclosure process, not leading up to it, like notice of sale stuff. So if you're investing in states like Florida, some of these homes have been in the foreclosure process like 4 or 5 years. It's crazy. Freddie Mac shared that while stalling the foreclosure process might be good for the consumer in default, it costs sometimes 15% more to service the non-performing loans, increases risk for vandalism and blight, and poses risk for neighborhoods and city coffers. Some research even finds that the judicial review process doesn't necessarily equate to better outcomes for the borrowers, which is, of course, a main concern here. So, Freddie says a balance is needed in protecting consumers while speeding up the foreclosure process. So that's going to be really interesting to see if that really changes in 2016, because this is a little bit of a political issue. So here in California, especially markets like the Inland Empire and Sacramento, we've all got the pleasure of dealing with these big Wall Street companies that have got into rental securitization. So companies like Invitation Homes, Waypoint, and Silver Bay. The investments so far are so new that it's really hard to have enough data points to know exactly how well they're doing. So speaking to a few local employees of some of those companies, they've dealt with things like high employee turnover, higher than expected repair costs, and of course, higher than expected vacancy rates. But I'd have to think that even the deepest pockets would struggle to get through that process, considering they just took on thousands of homes so quickly. So, what are you going to do? Appreciation certainly has made the investment look a little bit more attractive from a Wall Street perspective, but I'm really watching this long term to see how they play the market going into 2016 and beyond. So, welcome to Landlording Wall Street. So my question is, will Wall Street be able to hang in quadrant 4 with the local pros? So distressed inventory is way down, and that's where they were picking up the majority of their inventory, and our industry has moved on to working with sellers directly. So how are they going to compete, and what do you think is next for these Wall Street rental companies in 2016? Are they in or are they out? If you're on YouTube, please leave a comment below and like and subscribe to the channel. If you're on Facebook, leave a comment below. I'd love to see what you have to say about this topic. And of course, there are many more headlines on thenorrisgroup.com/blog. Up on the radio show this week, we've got I Survive Real Estate airing one of the last 2 sections, I believe. You could also catch it on our radio show, or you can watch the entire video if you don't want to wait at isurviverealestate.com. December 8th, we launch a new talk, Stay Put, Cash Out, or Change Seats. This really addresses why you'd want to do any 3 of those things in the state of California, and I get these phone calls almost every day. People are stressing out. So we're going to start that in San Diego with SDCIA on December 8th, and then we'll be picking up doing a lot of different sessions. We'll be in a city near you starting in January. January 5th, we'll be in LA with Prosperity Through Real Estate doing the same talk, and Coachella Valley at CV RIA on the 12th. And of course, there are many more of our events on our website. There you can also find information on our hard money loans, including fix and flip, buy and hold, and new construction. But if you're looking for more passive ways to invest with Trust Deeds and the Norris Group, check out tngtrustdeeds.com. With that, have a fantastic Thanksgiving weekend, and we'll see you next week.